Welcome back. According to new data from Royal LePage, home prices in Canada rose in the second quarter. At the same time, the number of properties that changed hands fell, and inventory levels across several regions climbed. To make sense of all of this, let's talk to Phil Soper, President and Chief Executive Officer of Royal LePage. Welcome, and it's good to see you again.
Good to be back.
You wrote recently that Canada's housing market is struggling to find a consistent rhythm, and you made the point that home prices have risen recently while the number of properties bought and sold declined, and that's an unusual combination.
Yeah, typically when demand falls, sellers are forced to lower their prices in order to move them. But we continue to live in an environment, have for a number of years, where we've got a critical supply shortage in the country. So it's acting as a stopgap, a floor on home prices.
A lot of people remember when the Bank of Canada, when it was raising rates, paused at one point, and that ignited a lot of activity in the market. But have we seen, we have not seen a pickup in activity since the rate cut last month, correct?
No. Particularly not in our two largest markets, Lower Mainland British Columbia and here in Southern Ontario. Little different story in Alberta and Atlantic Canada, prairie provinces where lower prices have allowed first-time home buyers to get back into the market when they psychologically felt was the right time. Mm-hmm. So they weren't structurally shut out based on affordability.
Everybody expects more cuts from the Bank of Canada. Are perhaps would-be buyers acting rationally and waiting for more rate cuts to happen before they make a move?
We did a piece of research a few weeks ago where we asked people that exact question. Only 10% of those who said they were on the sidelines waiting to get back in the market, only 10% of those said 25 basis points would be enough to make them move.
Right.
Now, the story changes when you get to even that second cut. So I do believe we have pent-up demand there already. Certainly population-based would say people are looking for shelter. But at this stage, it is still pretty slow.
Most economists, I'd be interested to hear what you expect. Yeah. Most economists expect at least one more Bank of Canada rate cut this year, and at least a couple next year. That would take the prime rates at banks, for instance, down by a full percentage point in the aggregate. Do you expect something of that, and how material is that to the residential real estate market?
Yeah, we're not pricing in a July cut, simply because we saw uptick in inflation the last mark, and the bank has shown to be very conservative and cautious since the spring of 23, when some comments made by the governor caused a very short but pretty aggressive reaction in the market, consumer spending, house prices. So we're expecting the first cut to occur in the fall, September. But we've got inflation data coming out next week, and I believe there was inflation data this morning from the U.S. that showed a deeper drop to inflation than expected, and house prices there have sagged as well. So it may be the point whereby the soft landing everybody's looking for could be at risk if they wait too long. So you never know. We could see a July cut.
Is work from home having a material impact on residential real estate? Are some
No,
buyers...
it's a commercial play.
Right.
It's definitely opened up working in Atlantic Canada from rural locations. But I think we've sort of settled in the post-pandemic era as far as residential.
People aren't moving to smaller, less expensive locales to work from home?
Yeah, no, you raise a good point. Mm-hmm. We're still seeing interprovincial migration at rates we didn't see, say, in the teens and earlier. But we're also seeing a bigger gap between home prices in Toronto, for example, and other cities like Winnipeg and Regina. It's 3 now. You can buy 3 benchmark Royal LePage homes in Winnipeg for 1 in Toronto.
Yeah.
The home prices, we believe, by the end of the year in Toronto will eclipse those in Vancouver. So it is driving people to reassess where they live, probably more than anything else, because other costs are pretty equal across Canada.
What's going on in the Toronto condominium market? We hear a lot of negative headlines about owners finding it difficult to find a buyer, and in many cases finding it difficult to find a renter as well.
Yeah. I believe that is a case that's going to change in the fall. The vacancy rate for rental accommodation remains pretty low. It's something like employment, very, very sticky. And we've added a lot of new Canadians. Most of them settle in Southern Ontario or British Columbia, and most of them rent in the beginning. So we believe that rental investors or small landlords will get into the market ahead of end users this fall.
Phil, thanks a great deal.